Hello students, welcome to the lecture on budget concept and types, and after this lecture we will be able to learn the following objectives. Let's start with budget concept and types. A budget is a financial plan for the future concerning the revenues and costs of a business. Budgets for income or revenue and expenditure are prepared in advance and then compared with actual performance to establish any variances. Budgetary control is the process by which financial control is exercised within an organization. Managers are responsible for controllable costs within their budgets and are required to take remedial action if the adverse variances arise and they are considered excessive.
Definition: an estimate, often itemized, of expected income and expense for a given period in the future. In modern terms, a budget is a plan to spend less than you make each month. So let's build a sample and see what a budget looks like. We'll create two columns. Let's start by entering the median U.S. income from last year, which was roughly $50,000 per year, equating to $4,167 per month. Next, we'll enter some common expenses. If we add these up, we have a total of $4,400, $4,167 per month, and spend $4,400 per month, meaning we're spending $233 more than we make. This is crazy. We're broke. There's two ways to fix this problem. Either increase your income or decrease your expenses. Let's take a look at our expenses first. The first few are pretty solid and not easy to change. But we then arrive at entertainment and recreation, then clothing. Those two categories total $750 per month, so we can definitely trim some spending there. Here's where your life changes for the better. Take a look at why your entertainment and recreation costs are so high. Are you going to the movies every week? Do you have a gym membership? Partying too much? And don't forget clothing. Are you spending too much money on shoes and purses each month? If so, it's time to cut it out. Just reduce those two categories by 35%, and you'll have a balanced budget each month and even a few extra dollars for something else. It's not that hard to have a healthy budget. You just need to live within your means.
Concept of budget. A budget is a financial plan for future activities. It is a plan for saving, borrowing, and spending. The budgets used in business often include a sales or revenues budget detailed by products or services, production budgets, budgets for each department in the company, cash budget, capital expenditures budget, and others. The combination of all the budgets is referred to as the company's master budget or profit plan. Budgets help management decide which activities it will undertake and how the company's resources will be used. Budgets can also assist in controlling the actual costs because managers realize that the costs of their activities will be compared to the budget. The main characteristics of a budget are: it is prepared in advance and is derived from the long-term strategy of the organization. It relates to future period for which objectives or goals have already been laid down. Advantages of budgets. Why is budgeting money important? When you budget money, you're giving yourself more room for error in life. When you budget the amount of money you spend, you're always in a much better position financially overall. Another great reason why you should budget your money is based on the spending side. There are a variety of tools and techniques that you can use if you want to start budgeting your funds. But first one of the best first step you can take if, when you are budgeting money, you're capable of finding the areas of life where you're spending money on unnecessary expenses. Budgeting. Business budgeting is one of the most powerful financial tools available to any small business owner. The most effective financial budget includes both a short-range, month-to-month plan for at least one calendar year and a long-range, quarter-to-quarter plan we use for financial statement reporting. The long-range plan should cover a period of at least 3 years. Some go up to 5 years on a quarterly basis or even an annual basis.
How to set a budget and stick to it. Nowadays, I know it is not easy keeping your hard-earned cash in your wallet, even when you're trying to be responsible, right? I mean, we've all got a variety of need-to-have expenses like a mortgage, car repairs, and college tuition to pay for. I mean, never mind the like-to-have expenses, that you want to treat yourself to once in a while, like a new pair of cool high tops or those fancy designer jeans. So I'm sure your question is, how do you keep all those things from chipping away at your bank account? Well, no matter who you are or what you're spending your money on, you could probably use a budget, especially when the average household spends 80% of its annual income on a range of necessary expenditures, which includes almost 60% on housing, food, gas, and insurance alone. Now, that's a lot to pay for, right? I mean, so then how can you ensure you're being as smart with your money as you can be? Well, by creating a budget. It's the tool you need to help you stretch your paycheck as far as it'll go. And now all it takes is just a little bit of discipline, planning, and most importantly, prioritization. While creating a budget may seem overwhelming at first, I know, believe me, the time you spend putting it together, that's going to certainly be worth it when the process of paying your monthly bills becomes a little less stressful. So where do you start? Well, setting a goal is always a good place to begin. It gives you something to shoot for. And then, of course, making a plan, that's going to set you in motion. So here's how to do that in 6 easy steps. Step 1, know your income. Seems simple enough, right? But knowing how much you can spend each month starts with knowing how much you take home. That means you can't build your budget based on your salary. I mean, it should be based on your net income. So get out some pay stubs and see what you're clearing after taxes, insurance, 401k contributions, and other stuff like that. Step 2, determine your basic expenses. Figure out what your fixed expenses are every month. Now these are the things that don't fluctuate or change dramatically through the year, like rent or mortgage payments, good old car payments and insurance, student loans. This is also a good time to make sure you have some kind of safety net to help pay for these expenses in case of an emergency. Like, let's say you need a new water heater or your car needs a new transmission. There you go. So if you have a safety net established, great. If not, there happens to be a video on this site called Easy Ways to Save on Everyday Expenses. And that can help you find some extra money to put towards that savings. Step 3, determine expenses that vary each month. These are the things that change based on usage, like your phone and other utilities, as well as your grocery bill. That could change. You could also add up all those flexible expenses like clothes, those jeans, restaurant meals, entertainment costs. These are the costs that you have control over. Step 4, determine what's really important. When it comes to creating a budget that works, you have to take a really hard look at what you feel is truly necessary. As much as you'd like to think you can't live without the latest gadget, this type of expense should go into the like-to-have category. So if you want to find the fluff in your budget, start digging into your variable expenses and rank what's most important to you. I mean, do you really need unlimited texting on your cell phone? If not, get rid of it. Are you watching all 437 channels of cable? No? Downgrade to basic. For more simple tips that, can help you save, check out that video I mentioned, Easy Ways to Save on Everyday Expenses. Because if you follow some of the tips there, you could save hundreds of dollars each year. Yes, hundreds. Step 5, follow your spending and review monthly. You want to give your budget a fighting chance, right? So just keep an eye on your wallet, and especially those credit cards, to make sure you're spending within limits throughout the month. It's easy to forget, right? And even easier for the small things to start adding up. So keep on it. Step 6, keep track. Find a way that works for you to keep track of your expenses. That can mean the old pen and paper, a spreadsheet, or one of those new fancy, fun budgeting apps. A lot of banks have these as part of their online banking. They're easy to find and use, so be sure to look for them. Then you just balance your budget. Keep your income information current and track your actual expenses monthly. After a few months, you're going to start to see patterns and figure out where you can streamline and make adjustments. Now, if you don't want to go it alone, if you're like a little company, there are some sites all over the internet to help you analyze what you have coming in and what you're spending. And if you're the pen and paper type like myself, or even the computer spreadsheet type, check the links at the end of the video in the What to Do Now section, where you can access a handy budget worksheet. It's great. All in all, making a budget is a process that will take some time and effort. But put these steps into place, and what you'll get in return is well worth it. Trust me. You might relieve some anxiety over your bills and feel better about yourself and where your income is going. Not so bad, right? Put them into everyday practice, and before long, you could have more money for the things you want, like high tops, in addition to the things you need.
Budgeting control. The exercise of control in the organization with the help of budgets is known as budgetary control. System of creating budgets, monitoring progress, and taking appropriate action to achieve budgeted performance. A budget should provide the information necessary to enable approval, authorization, and policy-making bodies to assess a project proposal and reach a rational decision. The process of budgetary control includes preparation of various budgets, continuous comparison of actual performance with budgetary performance, and revision of budgets in the light of changed circumstances. Organization for budgeting. The setting up of a definite plan of organization is the first step towards installing budgetary control system in an organization. Responsibility for budgeting. The responsibility for preparation and implementation of the budgets may be fixed as under. Budget controller. Although the chief executive is finally responsible for the budget program, it is better if a large part of the supervisory responsibility is delegated to an official designated as budget controller or budget director. Budget committee. The budget controller is assisted in his work by the budget committee. The committee may consist of heads of various departments, with production, sales, finance, personnel, purchase, etc., with the budget controller as its chairman. It is generally the responsibility of the budget committee to submit, discuss, and finally approve the budget figures. Fixation of the budget period. Budget period means the period for which a budget is prepared and employed. The budget period depends upon the nature of the business and the control techniques. Budget procedures. Budgeting process is a systematic activity that develops a plan for the expenditure of a usually fixed resource such as money or time during a given period to achieve a desired result. Key factor. It is also termed as limiting factor. The extent of influence of this factor must first be assessed in order to ensure that the budget targets are met. Making a forecast. A forecast is an estimate of the future financial conditions or operating results. An estimate differs from a budget in that the latter embodies an operating plan of an organization. A forecast may be prepared in financial or physical terms for sales, production cost, or other resources required for business. Preparing budgets. After the forecasts have been finalized, the preparation of budgets follow. The budget activity starts with the preparation of the sales budget. Then production budget is prepared on the basis of sales budget and the production capacity available. Financial budget, that is cash or working capital budget, will be prepared on the basis of sales forecast and production budget. All these budgets are combined and coordinated into a master budget. Advantages of budgetary control. The budgetary control system helps in fixing the goals for the organization as a whole and concerted efforts made for its achievements. Some of the advantages of budgetary control are maximization of profit. The budgetary control aims at the maximization of profits of the enterprise. To achieve this aim, a proper planning and coordination of different functions is undertaken. Coordination. The coordination of various executives and subordinates is necessary for achieving budgeted targets. Specific aims. The efforts are directed towards achieving some specific aims. If there is no definite aim, then the efforts will be wasted in pursuing different aims. Economy. The planning of expenditure will be systematic and there will be economy in spending. Determining weakness. The deviations in budgeting and actual performance will enable the determination of weak spots. Corrective action. The management will be able to take corrective measures whenever there is a discrepancy in performance. Types of budgets. Different types of budgets are described as follows. Master budget. Master budget is a combination of all other budgets prepared for a specific period. It shows the overall budget plan. All the budgets are coordinated into one harmonious unit. It is prepared by the budget officer and it requires the approval of the budget committee before it is put into operation. Sales budget. The sales budget is usually the keystone in planning and control of operation of a business. Sales forecast serves as a base for the sales budget. The sales manager should be made directly responsible for the preparation and execution of sales budget. Production budget. The production budget is a forecast of the production for the budget period. It provides an estimate of the total volume of production, product-wise, with the scheduling of operations by days, weeks and month, and also a forecast of the closing finished product inventory. The factory manager is the person generally made responsible for its preparation, administration and execution. Materials budget. Material budget can be prepared on the basis of standards or historical data regarding percentage of raw materials to total cost adjusted for current price and normal wastage of material. Purchase budget. Purchase budget gives the details of material purchases to be made in the budget period. Purchase budget enables the budget officer to provide funds in the cash budget according to delivery schedules, terms of payment and credit period. Direct labor budget. The direct labor budget tells about the estimates of direct labor requirements essential for carrying out the budgeted output. The purpose of this budget is to ensure optimum utilization of labor force. Cash budget. A cash budget is a summary statement of the firm's expected cash inflows and outflows over a projected time period. The overall objective of a cash budget is to enable the firm to meet all its commitments in time and at the same time prevent accumulations of unnecessary large balance with it. Fixed budget. A fixed budget is a budget which is designed to remain unchanged irrespective of the level of activity actually attained. Fixed budget is useful when there is no significant variation between the budgeted output and the actual output. Flexible budget. Flexible budget, also known as variable or sliding sale budget, is a budget which is designed to furnish budgeted costs for any level of activity actually attained. A flexible budget is a budget designed to change in accordance with the level of activity actually attained. A flexible budget is more realistic, useful and practical The likely changes in the actual circumstances are taken into account while preparing a flexible budget.
Now for some, budgets can seem complex and intimidating. So let's simplify. A budget is a plan for how you spend your money. Now many plan their spending by looking at their account balances, but this can be misleading. We'd like to show you envelope budgeting, a better way to plan your spending. But let's take a look at account balances first. The problems arise when people view their available balance as money they have left to spend. But this isn't true and can get you into a lot of trouble. Let me give you an example. Meet Joe. Let's say on the 20th, Joe checks his account balance. It's positive. So he decides to take his family out for a nice dinner and decides to reward himself with a little gift. And even after all this, he's still well in the black. So what's the problem? Well, Joe forgets things. Like that on the 25th of each month, his mortgage company automatically deducts his payment from his account. And his credit card bill is due at the end of the month. This is not good. And adding insult to injury, Joe's bank then hits him with an overdraft fee. Yeah. Oops. You see, for Joe, basing his spending on his account balances got him into trouble. Fortunately, there is a better way. Envelope budgeting. Oh, that's Iba. We'll talk about her a little later. But anyway, on to envelope budgeting. The first thing you should know is that this is not just a way to track your spending, but a way to plan your spending. Let me show you. Each envelope represents a budget category, like groceries, mortgage, eating out, and transport. And each starts out empty. The next thing you need to do is set them up. So at the beginning of each month, or whatever budget period you choose, you fill each envelope with that month's allotment. So from your paycheck, let's say you set aside $300 for groceries, or $1,500 for mortgage, etc., etc. So once your envelopes are set, just simply use money straight from the envelope. So for example, when Debbie buys groceries, or Joe buys ice cream, or Joe eats out, those get deducted directly from the envelopes. If you do this, your envelopes will always show you how much money you have left to spend. So let's see how envelopes could have helped Joe. Let's say it's the 20th again, and he wants to take his family out for dinner. This time though, he's going to ignore his checkbook balance, and instead take a look at his envelopes. And just by looking at them, he knows that he only has $30 left, so going out is probably not an option. But pizza is. It may not be steak, but it is pizza. And Joe is not in trouble. Or is he? After getting that sinking feeling whenever he forgets something important, Joe remembers that his mortgage is due on the 25th. But Joe, don't worry. The money for the mortgage payment is safely tucked away in the mortgage envelope. Envelopes keep things straight even when Joe forgets. So relax, Joe, and get back to your pizza. So let's recap. Envelope budgeting is the better way to plan your spending. Envelopes keep your money separate so that you can allocate it to specific expenses. Envelopes help you control your spending by giving you immediate feedback on how much money is left as you spend. And all this helps you spend only what you have.
Advantages of the master budget. The master budget allows managers to re-evaluate their plans, either starting with their current activities or start from zero. Zero-based budgeting, justifying all activities that do not start at zero. The master budget can also be used as a form of benchmarking. Disadvantages of the master budget. It includes the lack of participating from subordinates, misleading information, and difficulty of acquiring accurate and reliable information. Zero-based budgeting. Zero-based budgeting, ZBB, is an alternative approach that is sometimes used particularly in government, and not-for-profit sectors of the economy.
Zero-based budgeting. Now, what is zero-based budgeting compared to more traditional budgeting? Well, in traditional budgeting, if you remember, we're looking at creating a forecast for what we're anticipating will happen in the future. And we're looking at exactly what we've done in the past, what changes we're going to make in the future. Well, in zero-based budgeting, we take a very different approach, because in zero-based budgeting, what we're focused on is not so much what we've done in the past, but what we need to use for the future. So all costs have to be justified on a line item by line item basis. Any costs that cannot be justified are automatically taken down to zero. This changes everything. It really requires us to think and look back at the best utilization of our resources. One of the big problems in traditional budgeting is the tendency to look at what we've used before and just add a certain margin for the growth, without ever looking at whether or not we need to spend what we spent before. So this forces us to be more efficient and more effective in the use of our resources. In fact, in many cases with zero-based budgeting, we can actually produce more in the next period than we did in the last period, spending the same or even less, because what we're really effectively doing is eliminating waste.
Advantages of ZBB. Alternatives analysis. The ZBB requires that managers identify alternative ways to perform each activity, such as keeping it in-house or outsourcing it, as well as the effects of different levels of spending. Budget inflation. Since managers must tie expenditures to activities, it becomes less likely that they can artificially inflate their budgets. The change is too easy to spot. Communication. The ZBB should spark a significant debate among the management team about the corporate mission and how it is to be achieved. Mission focus. Since the ZBB concept requires managers to link expenditures to activities, they are forced to define the various missions of their departments, which might otherwise be poorly defined. Required review. Using ZBB on a regular basis makes it more likely that all aspects of a company will be examined periodically. Resource allocation. If the process is conducted with the overall corporate mission and objectives in mind, an organization should end up with strong targeting of funds in those areas where they are most needed. Disadvantages or limitations of ZBB. Difficult to define decision units and decision packages as it is time consuming and exhaustive. Forced to justify every detail related to expenditure. The research and development R&D department is threatened, whereas the production department benefits. The ZBB must be clearly understood by managers at various levels to be successfully implemented. In a large organization, the volume of forms may be so large that no one person could read it all. Honesty of the managers must be reliable and uniform. Summary.